good day, traders, and it's been a thoroughly eventful morning playing through in FX markets and also fixed income markets. We've got the Aussie 10-year down about 14 basis points as I speak at the moment, and that's probably certainly more exasperated considering as what we saw from US 10-year trading down about 3 or 4 basis points. So there really has been a big move playing through. There's probably been a bit of damage done to the psyche of traders as well as to actually what has caused this move. And I think there's a culmination of factors. I think firstly, it's important to understand that we've been seeing dollar yen, Aussie dollar, the high beta currencies moving progressively lower over the last few weeks. Now we're sort of testing multi-year lows in a lot of these currency pairs. And a lot of that has been down to the idea it's not just about US-Sino relations anymore. This is not about whether we can get a deal. It's about whether the damage has already been done to the global economy and how much further this slowdown can actually have. We've certainly seen that Euro PMI numbers, the Euro data series being quite weak for some time. And, we can now manifest that into what we've been seeing in Southeast Asia and also in China, where we've seen some weak numbers coming out, PMI numbers coming out of Taiwan, Korea as well, coming out with some poor numbers relative to what we were expecting there. And also you've been seeing, the Taishan manufacturing numbers going into contraction, as that has been the case with the National Bureau of Statistics numbers, which look at slightly bigger manufacturing companies there as well. And we look at new export orders and new order components, again, very weak. And, you can go into the US, where obviously we've been quite worried about what's been happening in the interest rate sensitive parts of that economy for some time. You can have a look at the Dallas Fed manufacturing numbers. That's fallen away quite sharply because what we've been seeing in falls in oil, falls in inflation expectations as a result there, but also what we've been seeing in the Richmond Fed numbers. And as we go into tonight's ISM manufacturing numbers, there is a concern that perhaps the consensus at 57.5 on that index is actually going to be taken out to the downside. So the matter is that we are worried about global growth, and that's priced into the US rates market, where we can see 20 basis points of cuts being priced in for 2020. So we're nearly pricing in one full rate cut there. And of course, that's had a big impact on what's been happening in dollar yen, and that's where it's been moving lower. And of course, in that situation of slowing Asia and slowing global growth, people have been selling Australian dollars. Aussie yen's been the real proxy there. And as we take into multi-year lows in this situation, when we come into the Asian time zone, into what was really the twilight zone between the close of the US session and the ramp up of Asia, we had Apple coming out with a downgrade to their revenue numbers. We're down about 8% relative to guidance. And of course, in that situation, markets are not liking that. We saw S&P and NASDAQ futures lower. Markets took a little bit of time, but I think once we traded through lows through that 108 level in dollar yen, we saw this vacuum taking place. The algos really took over. I think we saw this vacuum and price just descended very, very, very aggressively. In that situation, Aussie yen came along for the ride. The yen crosses moved very, very sharply lower. Aussie dollar traded through those lows. There's no doubt in those situations that we probably would have seen some fairly big stops going through. The big banks obviously loving to place stops below significant lows. And I think we saw a decent stop loss run through there. Obviously, algo sensed that the move was probably a little bit overdone, certainly in Aussie yen, where we saw the move down, about 7% or so. And then we've seen, the algo's really stepping in, and we've seen a nice snapback there playing through. It's important to understand this was not one particular piece of news, such as, Jerome Powell saying something or Donald Trump saying something. It's a combination of various factors, but it really has happened at a very illiquid time in markets. And I think once we got the combination of Tokyo being on holiday today, liquidity coming through the markets, a stop loss run, you've obviously seen these big situations. But if I have a look at the intraday charts, it really does look like it started from dollar yen when we sort of moved through that sort of 108 level and we sort of descended down. But the fact that we snapped back does suggest that this was a liquidity issue. It does suggest that algos had a big part to play in it. And of course, we'll just see how this plays out in the short term. But I expect markets to be a little bit jittery in the short term. We're probably going to have to see central banks such as the Bank of Japan coming up and talking about liquidity and offering, liquidity to banks in this environment to try and soothe some of the volatility we've been seeing there. But markets have come alive, and I think it's a combination of various factors playing through. But at the very heart of this, it's the fact that we've traded through key levels, and as a result of what we've been seeing from Apple and obviously the global growth concerns. So let's keep an eye out for the rest of the week. Let's have a look at this ISM manufacturing numbers. Let's have a look at Jerome Powell speaking on Saturday morning at 2 o'clock, non-farm payrolls then as well, because this could feasibly continue for some time. Just be prepared in this situation to understand your position size, understand the risks that are happening around this period in time here.